Why is it that some people lose a lot of money on like a 5 minute time frame, but they switch over to longer term time frame like the 4 hour chart and they make a bunch of money trading? And then consequently, why is it that some people switch from a longer time frame to a shorter time frame and they end up killing it in the market? I've already made a video on exactly the time frames in the market, but I wanted to go over the emotional aspect of each and why traders make the switch. So after over a decade of trading, I have found that most traders actually go from a lower time frame to a higher time frame trading. And this is the exact switch that I actually made in my trading as well. But the answer is why. And the why is simple once we break down the different components of each. Let's start with the 5 minute. So a lot of traders are initially drawn to the lower time frames, like either the 5 minute chart, 3 minute chart, 1 minute chart, um, even 15-minute chart. It's kind of getting out of that range, but we can consider 15-minute as lower time frame because of the quick entry and exit. In other words, quick. And I found that traders and just people in general, they love quick, they love fast, get in and get out, right? So that quick entry and exit is something that appeals to a lot of traders, especially because a lot of traders come in and you're excited, you're new to trading, or you've been trading for a while, and it just gives you that rush and that thrill as if you just won $1 million on a poker hand. That's how having a winning trade feels like to you, and you want to have more of those winning trades. Hence, you want quicker entries and exits. Why? Because on the 5 minute chart, you'll be able to have way more or multiple trade opportunities. And when you have a lot of trade opportunities, you have a lot of different examples, a lot of different instances that you can enter into the market to be able to trade whatever edge that you have established around that time frame and that system that you're trading. So a lot of people love the idea that there's multiple trading opportunities. And with multiple trading opportunities, I found that FOMO, for most people, FOMO is fear of missing out. And for this example, let's just use fear of missing out on a trade, right? Because there's many different types of FOMO that I talked about before. But I found that FOMO is generally lower than the 4 hour. Because if you miss a trade, it's fine. You're in the 5 minute, you may get like 4 or 5 trades a day. So if you miss out on one, you'll be fine. So that's a benefit for emotions. However, what about over trading? Because I found that with the 5 minute chart, and when I say five, it can be anything that's lower time frame. So whether it's like a 5 minute chart, a 3 minute chart, 1 minute chart, a 10 minute, whatever, I find that on these lower time frames, a lot of people, a lot of traders start over trading. Why? Because there are a plethora of trades out there. And then you get in the habit, you get in the mindset of almost like this gamified mindset instead of a trading mindset where you just want to trade, 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 trade. And you start taking a lot of, say, quantity over quality. And this is a very dangerous spot to be in because we start to assume that quantity is the same as quality when it's not at all. And this is a dangerous thing I see people fall into with the lower time frame. Now, shifting over into the 4 hour chart. What's the differences in terms of the emotionalness and the characteristics of it? So when I say 4 hour, this can be 4 hour, 1 hour, daily chart, weekly chart. Although I don't see people really trade the weekly, but 4 hour, 1 hour, daily is that it's a longer hold time, obviously, because we're dealing with longer candles, right? 4 hours to form a candle compared to 5 minutes. So it's a much longer hold time. So you're really going to be swing trading the market and may not be day trading as much. However, this 4 hour or higher time frame is more respected. What do I mean by more respected? I mean that the market structure that's formed on a 4 hour chart is going to hold up better and be more respected on average than a lower time frame chart like a 5 minute, 3 minute, 1 minute. So if you find that when you mark like high lows, high lows, high lows in the market, higher highs, higher lows, when you find that these structures are constantly getting broken back to back to back and like whipsaws in the market, it's because the structure on a lower time frame simply isn't as respected as on a higher time frame. I find that higher time frame structure, and I know for a fact it holds much better and is much more respected than a 5 minute. So that's one reason why a lot of people switch. And that's one thing about emotional time frames when it comes to the 4 hour chart. Next is quality. I find that because market structure is respected much more, the actual quality of trades is generally higher than if I'm on a lower time frame. Because I can have the same exact strategy. Let's just use break and retest for now, because that's a simple one that most people understand. And say we have market structure like this, going down, going down, going down, right? Making clear, if we can see this, making clear lower lows, lower high, right? And it's coming to make another lower low wherever this stops. And now, say we want to trade this kind of support and resistance zone. So I find that on a lower time frame, price may come back into the zone and it may give a little reaction to get you in on a lower time frame, and then just like spike up and stop you out. And not just stop you out and keep going in the direction, but stop you out and then just start forming like new structure to the upside. However, I find that on a 4 hour, if I see this setup form, I find that it's going to come up here. It's going to give me some type of entry signal, and it's going to go in this direction. Now, it may not continue to make lower lows, but I do find that it's going to have some type of reaction here. And that if it decides to go up, typically it's making either consolidation at this level, or it's going to keep going up in this direction. So I find that the structure is much better, much more respected, and that leads to more quality trades. Because on the 5 minute, this will just get like whipsawed up and down and just keep moving down, right? Just crazy stuff like that, because it takes lower amounts of money to manipulate on lower time frames. So it's more respected, better quality. But now let's look at the emotional nature. So FOMO. Fear of missing out is going to be higher if you're trading on higher time frame. Why? Because it may take you a month to find a trade. Right? And that's why realistically you have multiple different pairs, multiple different stocks, multiple different assets that you trade with, so that it won't take you months to find a trade, but you may have 4 or 5 different, pairs you trade with, or stocks you trade with, or futures that you trade with, so that in return, you're going to have like 4 or 5 different trades a month, or 1 trade a week, right? But even then, it's still going to be less than the 4 to 5 trades you may get per day. So the quality may be down, the win rate may be down compared to the longer time frame, but here you're getting more trades. So what trade-off do you want? So the FOMO is going to be higher because you don't want to miss out on this, because it may be a while before you're able to actually get another trade. So when it comes to over trading, what can happen? I find that over trading can be common to both time frames, simply because here you don't want to miss a trade, so you're going to trade things that you shouldn't trade just because you think it might win, or it lines up 80% to your strategy instead of the 100% to your strategy, so you're going to take it anyway because, oh man, I'm waiting so long to get a trade, whatever. So that aspect of the longer time frame can lead to overtrading. We already talked about the aspect that leads to overtrading on the 5-minute chart. So now that we have the back-to-back view on the lower time frame trading charts and the higher time frame charts, which one is better? Which one is actually going to make you money? Why are people switching from lower time frame to higher time frame? I never hear people switching from higher time frame to lower time frame. And it doesn't mean that lower time frame is not good. Obviously, we know the preference that I have, right? Since I made the switch over, after over a decade, I made the switch a little bit ago. But why? And the reason why is simply because, again, going back to it, is more respected and more quality of trades than on a lower time frame. Now, I know a lot of people are thinking, well, RD, I don't want to take a month for me to get a trade. I want to start making money now in the market. That's perfect. That's why you need to ditch your strategy. You need to test your strategy against multiple different pairs if we're talking about Forex. Don't just look at gold, but look at gold, look at Euro USD, look at GBP, JPY, look at Euro AUD, look at the different pairs in the market. And I want you to actually test and see, how does my edge line up to these different pairs? So now, instead of just trading on a 4-hour chart with one pair, you're trading it with 4 or 5 different. Instead of one stock, 4 or 5 different. So now you're having way more trades, but these way more trades are more quality trades where market structure is respected better. And then once people understand this and they understand, whoa, I don't have to only trade 3 trades a year or 4 trades a year, but I can actually trade 1 to 2 trades a week, That's when I find that traders start making this shift over into the higher time frame and they get much better consistency. And also, because you're trading a higher time frame, the amount of time that you need to actually stay on the charts to analyze, it goes down because the 5 minute you have to stay on the chart because it's fast moving, right? You can't really set alerts, walk away where you can with the higher time frame chart. So, when it comes to the emotional nature of it, the emotional nature depends on you and how emotionally you're geared. So if you need to just be trading 24/7 because you can't sit still, then obviously lower time frame is going to give you more action, it's going to give you more of that experience because there are traders out there. If you're fine with not having a lot of trades and all you're concerned about is like profitability, how can I become the most profitable, whatever the case may be, then higher time frame definitely may be the ticket. We already know which one I'm swayed to more, but understanding the emotional aspects of both and why a lot of traders switch from day trading to more swing trading ish, this is the exact reason why. So now the $1 million question is, okay, RD, I understand 5 minute versus 4 hour. I understand which one is better than me. I understand the pluses and minuses of both of them, but how do I actually be able to trade that and make money? I hope you guessed it by now, but this is where you're going to actually come and you're going to make a system to trade it with. And this system is, like we already know, is going to take your strategy that you have and is going to be able to roll that strategy up into a system which is able to flawlessly and consistently execute whatever your strategy entails. And that's how you can make this switch over to the higher time frame and actually be profitable on a consistent basis in the market. This is RD Trades, and I'm out.